Are you ready to navigate the energy stock market in 2023? Get ahead of the game with our Energy Stock Playbook, where we'll cover the latest trends, top picks, and what investors are hoping to see in the coming year. Join us as we explore the opportunities and challenges facing the industry and learn how to make informed investment decisions. Don't miss out on your chance to stay ahead of the curve and maximize your returns in the energy market. BlackRock, in their 2023 Global Outlook, cautioned of an impending recession, persistent inflation, and a new period that wouldn't be so nice to investors. According to Hildebrand and his team, the Great Moderation, a time of low inflation and stable economic development, gave stocks and bonds the opportunity to thrive in a way that won't be possible in the future. Investors will need a new, adaptable strategy in this new economic environment that includes careful stock selection and more active portfolio management. We don't see the sustained bull markets of the past. That's why a new investment playbook is needed, they wrote. What worked in the past won't work now. Are you ready to face the economic challenges of the future? According to BlackRock, 3 major regime drivers are set to shake up the market and make it more difficult for investors to turn a profit. Are you prepared to navigate the uncertain waters ahead? First, we have aging populations, shrinking the workforce, and putting pressure on governments to spend more on the elderly. This could lead to worker shortages, reduce production, and cause inflation to rise above central banks' targets. Are you ready to adapt to this new reality? Next, tensions between global superpowers are signaling a shift towards a new world order, where globalized supply chains that once helped reduce the price of goods may no longer be as reliable. This could disrupt the market and make it harder for investors to predict market trends. How will you adjust your strategy to take advantage of this new reality? Finally, the transition to clean energy is set to accelerate. But it could also cause inflation unless new streams of investment flow into carbon-neutral solutions. Are you ready to invest in the future and capitalize on this transition? The global economy is rapidly transitioning away from carbon-based fossil fuels to alternative energy sources, including renewables, due to climate change concerns. This energy transition is estimated to require more than $150 trillion in investment over the next 3 decades. The renewable energy will play a crucial role in this transition. Many companies focus on renewable energy, putting them in an excellent position to benefit from this investment megatrend. But which companies stand out as the best renewable energy stocks to buy? We've done the research for you and have identified some top-tier green energy companies, including NextEra Energy, Brookfield Renewable, Clearway Energy, First Solar, SolarEdge Technologies. These companies are leading the way in the renewable energy industry and are well positioned to benefit from the energy transition. Stay tuned as we will take a closer look at these companies and explore strategies for investing in the renewable energy industry. Don't miss out on opportunity to capitalize on the energy transition and invest in the future of energy. Number 5. SolarEdge Technologies. The company specializes in developing and producing an improved inverter system that increases the amount of power generated by solar panels, helping to reduce the cost of energy provided by the system. Similar to First Solar, SolarEdge Technologies is well positioned to profit from the accelerating global growth of solar energy. But the company isn't stopping there. It also begun to use its knowledge of inverters to develop other intelligent energy solutions. Through a series of strategic acquisitions, the company has expanded its offerings to include solar, storage, electric car charging, batteries, uninterruptible power supplies or UPS, electric vehicle powertrains, and grid services solutions. Thanks to its solid financial standing, SolarEdge Technologies has been able to diversify further into smart energy solutions. Its primary inverter business is lucrative and brings in a lot of money. In 2022, the company had almost $1 billion in net cash, giving it the freedom to keep growing and take advantage of the decarbonization megatrend. Number 4. First Solar. The company specializes in creating and producing thin-film solar panels that take advantage of their larger size to produce more energy than rival technologies. As one of the top producers of solar panels in the world, First Solar is well positioned to profit as the demand for solar panels increases. In order to improve production and satisfy demand, the company is actively investing in new facilities and expanding its manufacturing capacity. As of the second quarter of 2022, it had already sold out all of its capacity until 2024 and has agreements in place to sell panels until 2026, providing a significant amount of visibility into future earnings. With one of the strongest balance sheets in the industry, First Solar has the financial flexibility to keep growing. The company anticipated having between $1.3 billion and $1.5 billion in cash at the end of 2022, despite making significant expenditures on expanding its manufacturing capacity. This buffer provides them with a lot of financial wiggle room to keep growing and take advantage of the rising demand for solar panels. Number 3. Clearway Energy. As one of the biggest owners of renewable energy generating facilities in the United States, the company has a diverse portfolio of renewable energy sources, including wind and solar. Additionally, it complements its portfolio with highly effective natural gas-powered facilities and sells its power through PPAs, giving the business a consistent stream of income. In 2022, the company sold its thermal division, bringing in $1.35 billion in cash that it used to fund the expansion of its operations in the renewable energy sector. Clearway Energy has consistently invested in renewable energy assets, positioning itself as a leader in this field. These investments have given the company a better understanding of its ability to raise its dividend. Clearway Energy currently anticipates being able to increase its dividend toward the top end of its target range of 5% to 8% annually through at least 2026. The company plans to keep its financial standing strong while developing its renewable energy activities, generating significant value for its shareholders in the process. Number 2. Brookfield Renewable. One of the leading producers of hydroelectric power in the world and a pioneer in renewable energy, the corporation will have 50% of its portfolio from hydroelectric sources by 2022. However, Brookfield Renewable does not solely focus on hydroelectric power. Additionally, it has been expanding its knowledge in energy storage, utility-scale solar, and distributed solar energy sources, including rooftop solar. These sources include wind, onshore and offshore. Also, the company sells the majority of its power through long-term PPAs that produce consistent cash flow. Brookfield Renewable has had an annualized total return of 18% since its inception. Its growth has been fueled by the continual addition of new acquisitions and development projects to its portfolio. Over the previous 10 years, earnings have climbed at a compound annual rate of over 10%, which has enabled the company to increase dividend payments by 6% annually since 2012. However, Brookfield Renewable anticipates even greater growth in the years to come, up to 20% yearly through 2026, driven by its huge backlog of renewable energy development projects and new acquisitions. These initiatives should allow the company to increase its dividend by 5% to 9% every year, making it one of the top dividend stocks for renewable energy. The business anticipates keeping a strong balance sheet, which will provide it the financial freedom to keep growing. Number 1. NextEra Energy. As one of the world's largest producers of wind and solar energy, the company generates power at its Florida utilities and its energy resources segment, which sells power under PPAs to other utilities and users. NextEra Energy is one of the firms making the biggest bets on renewable energy. The utility revealed its Real Zero strategy in 2022, with the audacious objective of ceasing all carbon emissions from operations by 2045. While using green hydrogen and renewable natural gas in place of natural gas in its power plants, the company plans to considerably increase its solar energy and storage capacity. By making investments in renewable energy, NextEra Energy has a strong track record of generating value for its shareholders. Its above-average growth rate has driven exceptional returns, with a cumulative return of about 1,000% over the past 15 years. Since 2005, NextEra Energy has increased its adjusted profits per share at a compound annual rate of 8.4% and increased its dividend at a rate of 9.8%. The business has been recognized as a dividend aristocrat since it has increased its dividend for more than 25 years running. Next Era Energy anticipates that the dividends from its investments will keep going to the shareholders. With sustained expenditures in renewable energy, it forecasts that revenues will rise at or near its target range of 6% to 8% annually through at least 2025. Through at least 2024, the business anticipates a 10% annual dividend growth. Next Era Energy has one of the greatest balance sheets in the utility industry, giving it the financial freedom to keep growing. The new playbook calls for a continuous reassessment of how much of the economic damage being generated by central banks is in the price. BlackRock wrote, "That damage is building." The renewable energy revolution has been significantly sparked by both climate change and socially conscious investing. In the coming decades, the trend will spur trillions of dollars worth of investment in renewable energy. All boats should rise with the tide of clean energy, but investors should see some of the biggest returns in the top renewable energy equities. These green energy companies have already demonstrated their ability to create value, and they have the resources necessary to seize opportunities that should result in total astronomical returns in the years to come. We hope you've gained valuable insights into what investors hope to see in the coming year. As we've discussed, the energy industry is constantly evolving, and it's important to stay informed and make informed investment decisions. If you found this video helpful, give it a thumbs up and subscribe to our channel for more informative and interactive content on energy stocks and other investing topics. Remember, always do your own research before investing. See you in the next video.